by saying I haven't actually done this presentation before. I'm the lobbyist for the trial lawyers, so I usually am lobbying small people, talking to them directly, small people, small groups of people.
Some of which are small.
Yes, some are smaller than others. But in any event, I'm used to being asked questions. I'm not used to just speaking and talking ad nauseum. So if you've got a question when something pops up, go ahead, wave your hand, or just jump up and say something. I'll be happy to try and answer it. Yes?
Yes, could you introduce yourself again real quick?
Again? Okay. My name is Bill Flory. I'm with the Michigan Association for Justice. That's the organization we were formerly known as the Michigan Trial Lawyers Association. I'm here on behalf of the Coalition Protecting Auto No Fault. That work?
Yep. Yep.
All right. So like I said, I haven't really done this one before, so I'm not familiar with I'm familiar with the facts on the slides, but not necessarily their order. So if I start talking about something that pops up again later, that's because I didn't know where we were going. So go ahead. All right, yeah. To start with, I don't know if everybody's familiar with Michigan's auto no fault law. It was enacted originally in 1973, and wow, it's just going.
It's going ahead.
So anyways, it was enacted in 1973. The idea was that it wanted to provide a prompt payment for people who were in auto accidents. Previously, there had been, the situation was we were a fault system, and if you were in a car accident and you were injured and had hospital bills or even just damage to your car that needed to be repaired, your insurance didn't cover it. You had to get the other guy's insurance to cover it. And in order to do that, 9 times out of 10, you had to sue them. So we had a lot of cases going to court. It was not an effective way of distributing money for health care. And they decided to change it and set up this no-fault system, whereby you insure yourself. And you're covered for your medical costs. In fact, they cover all of your reasonable medical costs. I think that's part of the next slide. Yeah, that's what, this is what you get in return for giving up your right to sue in Michigan. You can only sue if you're really seriously injured, but you get your personal injury coverage, covers your medical expenses, covers your wage loss, survivor benefits for your family if you die. So next slide. No, that's another thing I should mention. Maybe they do it later, but initially it was declared unconstitutional, the auto no fault law, because initially they said because you're requiring people to buy insurance, you have to have some provision that protects people against paying more than they should. That keeps the insurance companies from basically treating it like protection money. And so what happened was they changed a bunch of the rules for insurance companies. They said, you know, you don't have to cover everything anymore. If you're an insurance company, you're only going to cover the first $500,000 of their injuries. They set up the Michigan Catastrophic Claims Association that was created just for paying for everything above $500,000. Everybody pays into it. You pay about $175 a vehicle every year. Probably see this assessment on your bill when you get it. It covers the people's costs that are seriously injured and the really long-term injuries. So, yeah. Adopted in 1972, they set up the MCCA, which helped to make it pass constitutional muster. Since then, we've had 2 ballot proposals where both were defeated on a 60-40 vote, both promoted by the insurance companies trying to get rid of no fault. Next. As I was saying, you get CPAN is made up of a lot of different groups. Yes?
Why are the insurance companies trying to get rid of no fault? Do you think it would be beneficial to them that they don't have to cover over $500,000
It is beneficial to them. They don't like the auto no-fault system because they're expected to pay on claims. And generally, the problem that they have with it, they claim that it's, well, first they claimed that it was going broke. And then when everybody started looking at the MCCA and looking at the $14 to $16 billion they have in it, nobody really bought that. Then they claim that it's too hard for them to keep administering some of the stuff. You know, they don't like to have these long-term things on their books. They've made a bunch of different arguments over the years, and none of them is particularly credible. I think the main reason they don't like having the no-call system is because it's a no-call. They're expected to pay. There's not a lot of excuses for them not to. And it's, compared to other states, it's a fair amount of money. They've got no-call systems in other states where your cap is $50,000, where that's all you've got. You know, once you're done with $50,000, you're going to have to go broke and go on to Medicaid. That's, for an insurance company, that's a lot better deal. Medicaid foots the bill. Yep.
And Medicaid is the taxpayers' money.
Yes.
Yep.
Now, does the $175 go directly to the fund? It does, the insurance
It goes
company has to
directly
take
to the
that
fund.
money and put it there, where they would much rather keep the money because they keep raising rates.
Yeah, the $175 goes directly into the fund, and the fund is invested. There's a group of people that watch over it and see to the investments and report on it annually.
What,
Yes.
the fund, what's the administrative percentage of that fund?
They won't tell us.
So this is money that the insurance company sets aside, but
That's one of the things, there's probably going to be in a later slide here. There's a current lawsuit going on that CPAN filed against the MCCA, FOIAing some of the information, the background information for how they come to their conclusions that they're supposedly going to go broke. You know, what are their future estimations? What do they, you know, when we say, we think in the future this is going to go broke, what are they planning? Are they planning on, 2% a year on their investments? Are they planning on 4%, 6%? How long do they think the people are going to live that are currently under the fund? How many more do they expect to get each year? All of this data is not provided. They will not provide any of that kind of information. But yet they keep trying to claim that it's going broke. Yes?
Remember me? It's a good concept, but how are you to really ensure that the insurance companies do compensate injury victims? I was riding as a passenger in December of '72 with a couple co-workers, my sister and brother. A stake truck ran a stop sign, we hit it, I went straight into the back of the driver's seat with my face. Sustained neck injuries. 2 days later, I was riding with another friend. We got 6 blocks from this doctor's house and were broadsided, and my head went into the dash where I had quite a large swelling of the skull. Now, I wasn't fairly compensated for even my lost wages. I came away with $4,100 from 2 accidents, and my buddy in the second accident wasn't even injured, and the insurance company paid him $5,000 just to settle up. Now, my injuries were ongoing. I went to school, got a job at Kmart, managed there for a year, went to Ford Motor Company right here in Saline. Through my work, the duration of work at Ford, I was off so many times due to these injuries, and every time I was losing money. So through my work history, I've lost a lot of income and then had to retire early due to the injuries. But after the first, all of a sudden they became pre-existing. Then no one wanted to pay. So then, of course, I explained to you how I was sideswiped by Detroit cop in '05, ticketed, sued for $40,000, and then all of a sudden, when I started bringing up some key issues that proved my case, it was dismissed and shoved under the rug. Now, one point I brought up is how can I get sued for driving someone else's car who dropped the insurance and didn't inform me when I paid into uninsured motorists, underinsured motorists, and catastrophic claims for years? I didn't have any of my vehicles insured at the time. And what I found really strange is that I was told, oh, well, even though he didn't have his vehicle insured, if you would have been insured, it would have been covered under your insurance. And I find that really kind of strange. So I'm going, well, in essence, if I have 3 or 4 vehicles and I insure a couple and then I want to drive this one over here, then I can put that on the insurance and then drop a couple, and then if I want to hop in one I don't have insured, oh, well, you're okay because you're insured with this vehicle. So I'm going, that's kind of
Okay,
great.
so can I, do you have a question? That's what I need to
Well,
know.
the only thing I wanted to leave with is the fact that I was on the phone with Allstate last week, only after answering a survey and asked, would you like to get a quote? And I told them I will never insure with Allstate and explained the whole situation. They apparently want to work with me and possibly compensate me for what occurred 6, 7 years ago. Because I said, well, if you make the wrong right, I will insure my house, car, motorcycles. So I was given a name and a number who handled the case up in Farmington. So I didn't call him, well, they tried to transfer me, but I didn't call him. And I said, I need to talk to you first.
Okay.
And maybe you might be able to assist me in getting this situation rectified and behind me.
Well, I think we can talk after about it.
Okay.
Okay.
I've got the entire file here.
So could you all ask the question during this presentation and then any other lengthy conversation with them afterwards, please?
Yeah, we can talk after.
Go ahead and finish.
Sure. Let's see.
And you were talking about the situation with the insurance companies having to
Yeah.
pay in their.
Well, I think we got through that with the question. I think on this is kind of what we were talking about, this slide, the fact that if you take people off of no fault, you're going to be sliding them into the private sector, either other healthcare coverage, if they actually have medical care, or you end up having to go broke and go on to Medicaid. And so, next one. Yeah, oh, yes.
Another question.
Can you tell us where the legislation currently is and what this group can help to do to move it along?
Absolutely. It's the current legislation, yeah, actually the slide after this one. So.
Okay.
Which drops it down to $1 million cap. Like I said, shifts some money to taxpayers. And the only savings we offer you is a $125 one-time reduction in your insurance.
The House bill?
Yes, the House bill is out there. It's on the House floor right now.
It's moving too much, Don.
So if you could stop the slideshow for a second
Yeah.
and redo the settings, that's why it's moving, because it's set on to move automatically under the settings.
Advance on mouse. Do they have a time?
Yes, he took the time. Mouse click. You're gonna, on mouse click up there where it says advanced slide.
Oh, wait,
Right,
right.
far right,
All right.
far right,
Down,
down.
no, down, down.